Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes. This is by Walter Anderson. You know, it's wild. I think Walter Anderson wasn't in Breaking Bad. Wasn't that guy's name Walter Anderson too? I think it was. Believe in something big. Your life is worth a noble motive. Market-wise, let's take a look at it out here. We had the Dow Industrials finish up 64, Nasdaq up 19, S&P's up 7.5. Gold contract down $8.70, traded $1,185 an ounce. Silver down 29 cents at $16.50 an ounce. Platinum down 11, trading out at $1,103 an ounce. You have copper flat at $2.72 a pound. Light sweet crude off $1.59, $59.67 a barrel. Bonds. The bond market, folks, is doing an ABC structure on the way down. If you need a mortgage, you're going to refinance, go do it. You get the 10-year right now trading at 2.3. That means you're going to be running about a 3.9 to 4 30-year mortgage. Do it. Do it now. 10-year down 27 ticks at 125.14. 30-year off 2 full points and 1 tick at 149.24. And King Dollar. King Dollar down 518 ticks, trading at 95.36. Now, King Dollar, folks, had been up 500 ticks this morning. King Dollar got toasted, roasted, all the above, gave up the 500 ticks, come down another 500 ticks. It looks to me like King Dollar is also an ABC structure on the way down. We're at 95.36 right now. 90 would be the number. We'll see whether it wants to get into that 88. King Dollar did monster volume once again today. Euro is up $1.20 at 121.71, and the yen is down up rather 14 at 124.25. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Walter White. Thank you, Walter White. Awesome. I wonder if he's related to Dave. Maybe it's Dave's brother. Okay, let's go take a look at the S&Ps out here. If we take a look at the SPYs, folks, this is what we have with the SPYs. SPYs, no movement out here today at all. They're still, what you did have with the SPY and the cash S&P, you had a failure on price, you had a failure on volume. You got to a price point today of 21.21. The first high that was generated out here, which was on February 25th, that's the benchmark that I'm using. It's 21.19. Bottom line, you get over it, close underneath it again. No juice behind the move. And what you have up here, folks, is this. You know, here, I'll give you both cases, the bull and bear case. The bull case first. The bull case, this is how, when you stay at highs, like we have, your probability is high that you are going to break higher and you'll actually have juice behind the move. Now, we've been at the same place since February 25th. So yeah, that's your bull case, because no matter how, you know, what I like to see, if you have the out of time to trade, I like to see how you're pushing into the swings. And we're certainly not pushing into swing highs with volume. But bottom line, the longer you stay there, the more probability is that you can break higher. So that's the bull case. The bear case is that each and every time, because now we have a consolidation also, you know, the highs of where we are right now is at the 212, 211. The lows at 204. Well, where all the volume is, if we put up two channel lines, one channel line at the very top at 211 and a separate one down at the bottom of 204, what you're going to see is that each and every time that you are up at these highs, there's no demand in the marketplace for equities. There's no one that's buying equities. Everyone's trying to sell them. As you go down, there's huge demand to get out of the marketplace, and the door is not wide enough. Each and every time that we start any type of acceleration down, bottom line is that the trapdoor opens and, you know, price disappears. So picture with price. This is how trapdoors open too, by the way, folks. So you have a bid, that's what someone, you know, and an offer, right? What happens when trapdoors open is that the bids go away. you know, it literally go away. I've seen them a few times literally go away, whether it's, you know, 0.2 points, 3 points, 4 points down. You know, when inside the futures market on the very large downdrafts, you know, they will get away from that market by an extraordinary amount. Bottom line, that's the type of market that we have right now. You had a failure out there. If we look at the NDX 100, now the NDX 100 is still the strongest market out here. And what we do have, that was a sideways market out here today. We're at a price point of 110.40. We did 19 million shares, and that 19 million shares is going against 30 million. Can't get anywhere. Now, what we are is that we are into the high volume, well, not high volume, Bob, we're into the high bar. That high that was generated inside the QQQs was the 27th. The low of that day was 110.02, the high 111.16. So, you know, we'll see whether it can go after it. Thus far, it hasn't been able to get that type of traction. And what we did have intraday today is that you had two huge moves on the way down, 12-point S&P moves intraday. If we go over the IWM, a little different story. The small caps, bottom line is that you got into and over the swing point of 125.46, and you have the juice behind the move. So small caps are going to make another run for the highs out here. That means he's going to make a run for this 126.91. We'll see how that handles it, but that's the way it's set up at this particular point. Gold, we need some real strength in gold. What we have with gold is this. Now, this is with the dollar down, too, folks. Gold did reject lower price out here. The divergence is that, okay, why can't gold get going when the dollar got toasted and roasted the last 2 days? Well, we'll see. Gold got to a price point today of 11.79. We closed out at 11.85. And 11.85 keeps it in the range, you know, because 11.80 is the number down there. What I would like to see is gold get into and over this 12.08 area. The 12.08 area is that May 26th area. So May 26th, we came down from 12.08 to 11.85. That's what gold is trying to do right now. It's trying to get up and over that. Coming into Thursday, Friday, you can expect more volatility. Bond market, as we said, bonds are just in... Well, it depends whether they're in trouble. We are going lower price, higher yield. The TLT broke a B point today, broke it with volume. It's a monster ABC structure on the way down. The TLT, the A point on this is 132. The B is 118. So you get big numbers there. You get, what, 15 bucks? The C point is 123. Was that right? Let me see. Yeah, that's right. 132 to 118. Yeah, 28. Yeah, you get 15 bucks or 14 bucks. That's going to get you out at the 110 mark. TBT. Oh, this is going to get interesting here. So watch this, folks, okay? Your direction share, TBT, which is the pro share 2 times leveraged position. That little baby is doing a ABC structure up. Almost didn't take it out with volume. What you're going to have is that your direction 3 times is doing an ABC structure up. There's going to be a lot of action out here in a big way. There's no doubt about this. Yeah, big movement, big movement. It's huge. Now, let's go take a look at good old King Dollar. So King Dollar also is an ABC structure on the way down. King Dollar has all the makings and has been hitting all these fib numbers in such an incredible way. It's amazing, actually. And that's right from how it had made a high on March 12th. March 13th, rather. March 13th? Yeah, March 13th. When we had made that high in King Dollar, dollar index, the whole world thought dollar was going to go to heaven, right? Bottom line, dollar had been going up, folks, since last July. Okay? Went from 80 to 100. That's a monster move. Now, doors open, you go straight down from 100 to 93. You do a counter trend bounce up to 97.5. And now volume blows out of it again. We're going into the swing point number 1, which is 93. More than likely you're going to go lower. We're going to be right back, folks.